The broadcast is now starting. All attendees are in listen-only mode.
Hello, welcome members and guests to the Virtual Investment Club of Sacramento. We are a Better Investing Model Club open to the public. Guests, you will be muted during the meeting as observers and will have an opportunity for questions and comments after the meeting is over. A quick disclaimer, the stocks presented today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. The views expressed are those of members and do not necessarily represent those of Better Investing. This meeting may use products or services not endorsed by Better Investing or the club. Now let's go to our treasurer's report. I will turn it over to Hanny.
Okay.
Just a minute. Okay, you're the presenter now.
Okay, can you see my screen?
Yes.
Okay, thank you very much. This month's treasurer's report, I tried to do things a little bit differently just to keep it interesting. So there's been a lot of talk in the press, in the financial press, about value stocks and growth stocks. And just to review very quickly, value stocks typically have low valuation metrics, such as price earnings, price book, and price sales. The chart that you're seeing right now is a chart of the Russell 3000 index, and the blue is the metrics for all of the stocks in Russell 3000. And you can see the first grouping here. The PE is about 20, a little bit over 20 for all of the stocks. But for growth stocks, the PE is a little bit higher, and value stocks are a little bit lower. And the same is true for price to book. Where this differs a little bit is price to sales. We see that the value stocks are, the price to sales ratio is a little bit higher. So that just gives you a sense of the valuation metrics in the Russell 3000 index. Here are some stocks with some insanely high PEs. These are recent numbers. Jefferies Financial Group, 779, and all the way down to JD.com, 314. The prices of these stocks are not that high, but the PE ratios are quite significant. So that's just highlighting some of these high growth stocks. But how are the two types of stocks? How have they done over time? Well, these are different time periods. So over 30 years, which is this is from an academic study, value has outdone growth. And if you look at the 10-year period, it's the other way around. We've had a lot of stocks like Amazon and Facebook and so on that have had pretty spectacular returns. And so over the last 10 years, we've seen that growth stocks are have been doing much better. But as the market changes and we have more volatility in the marketplace, we can see like within 1 year, the value stocks have done a lot better. So why am I mentioning all of this? Well, because when we come to do stock studies and when we're looking at our portfolio, we probably want to keep some of these concepts in mind. This graph is just, or chart is just the long-term return for the various types of investments, and you can see value stocks have done quite well over the long term, 13.5% versus growth. And also note that dividend stocks have done pretty well as well. So that's just setting the stage. In terms of our portfolio, this is our sector diversification chart, and I've just very quickly read the reports that Megumi, Roy, and Matt have put together, and sure enough, we are heavily weighted in the technology sector, and then followed by industrials. And these are the industries within those sectors. So within technology, we have semiconductor equipment and material, internet, and then business services, aerospace.
I haven't got a oh, sorry.
Okay. And then these are, again, just lining up the companies that we own in those industries and sectors. So here we have Heiko, Fleet, and Middleby in the industrials, and Tencent, Facebook, IPGP, and Skyworks in the technology sector. So just gives you I think that'll become relevant when Roy and Matt and Megumi have their presentation. This is from my iClub. It's what's called a gain-loss report, and it shows the stocks that we own when they were first purchased. And in the case of, for example, Disney, we purchased that twice. And but the first time we purchased Disney was in September 2016. And you can see the gain loss in dollars and in percent. I sorted it based on dollars. So our best performance to date has been Facebook, but we bought it 3 times. And IPG Photonics is next, and then five below. At the bottom here, we have the Realty, Tencent, Bank of the Ozarks, and Middleby. Now, Tencent, we bought that just recently in May, so still a bit early days for that, but it is down about 8%. And so what I decided to do is for these bottom 4 is go to, so we track our portfolio using a number of different websites. One is my iClub, the other is Morningstar, and the third is Manifest Investing. So this is what's called a chronicle in Manifest Investing, and it shows their quality rating, and the price is the green bars, quality is the blue, and par is the projected annual return going forward. And at any point in time, they project the return going forward. So within the next year, I think. So if you draw all of those points, you get this red curve. And then the relative return is where this company is expected to perform relative to all of the stocks that are covered by Manifest. So you could see Realty Income has got a negative return relative to the Manifest universe, which I think is, Roy, correct me if I'm wrong, but something like 600 or 700 stocks that they track, maybe more. The quality has dropped recently, and the projected return has also dropped significantly to looks like about 6%. Same graph for Tencent, but like I said, we just purchased this, so there's not a lot of data points here. You could see quality's actually gone up, and the par is also, it's a little bit going down, but it's quite high at somewhere around 35% or so, and the relative return also. So expect it to, for this to do well. If quality is above 20, they consider that normal, between 20 and 60. So even, something above 80 is exceptional quality. And so Tencent is within the normal range. It's not bad. Bank of the Ozarks, same thing. Quality's gone down significantly. You could see this is from 2014. Projected annual return is going up, and the relative return has gone up about 5% above the average of the stocks that they.
What do they mean by quality? How do they make that, Haney?
There are 4 metrics that go into quality. It's so basically their financial strength, their earnings predictability, things like that. So there's 4 metrics. I can send you that. But it's basically, is it a solid company? Is it stable? Does it have good management? Good financials. Middleby, the quality is pretty high, and I know I read Matt's report, and I tend to agree with some of the comments that he's made. I think they're valid. So a lot of those comments probably, Matt, are related to what's going to happen in the steel industry, and maybe that has not been reflected yet in this is April 2018, so maybe they haven't reflected those situations yet in their quality rating. But you could see the price has dropped, the green bars. Prices dropped, relative return has dropped quite a bit. So a bit troubling. So that's the treasurer's report. Any questions?
I don't. That looks interesting. Yeah, I noticed in Middleby the par is going down. It's dipped below 10.
Yeah. Well, and also the relative return is 0. So it's.
And
I didn't see Biogen on your list.
Well, I just where's Biogen? Did we? I think we sold Biogen. Did we not?
I don't think so.
I'll check, Tom. I'm not sure.
You know, Hanny, this is a very good report. I have a question. I noticed the convention is people typically use pie charts. And I would think it would be much better to use vertical bar charts, which could be prioritized so you could easily go from the strongest to the weakest. You could see the priorities in the vertical chart pattern. And if Excel could make a vertical charts bars instead of a pie chart, that would be nice. But anyhow, you're on a good report.
For which for these you mean?
These pie charts, why don't they? If you had vertical bars with the biggest on the left and the smallest on the right, you could easily see the prioritization that was taking place. When you look at a pie, it's not so easy to see.
Yeah, I'll see if I can export the data into Excel. I could certainly do it if I could export it. This is a bit busy. I agree. But I also put the numbers on there, so it's a little bit easier to see. But yeah, it might be easier with. I'll try it and see what I can come up with.
And Hanny, this is
already
Joanne.
good. It's already good.
Hanny,
Hi, Joanne.
next time,
yeah.
I'd like to. You showed stocks that weren't doing well, but I'd like to get that juxtaposed against a successful stock. Those kind of that chart that you had with the relative, the quality and.
Oh, sure. Okay.
Yeah, just to see what.
So this one, yeah. I just picked. I can do that, certainly, no problem.
Yeah.
I just picked these because I thought they were going to be discussed. So.
They are, yeah. Okay.
But I'll do that.
Thank you.
One. Thanks.
Biogen was on one of your pie charts.
Sorry?
Biogen was on one of your pie charts. There you go.
Yeah, you're right. BIIB. Okay, I'm not sure. So this is coming from iClub, but so is this. So I'm not sure why it's not showing up in this report. Let me check that, Tom. I'll make a note of it and I'll send out an email after the. Okay. And who's presenting next? Matt, Roy.
I think
Roy's going to do a education on a portfolio review or club visit.
Okay. All right.
Are you passing it on to him, Hanny, or you want me to?
I just did.
Yeah.
Okay.
No, I thought I just did.
Does everybody see what's called portfolio review worksheet?
Yes.
Yes.
Okay. The way we started is we wanted to look at all the stocks in our portfolio, but get current, numbers for them. And I had a form that excuse me, let me silence this. Apologize for that. Anyway, I sent the blank form to Matt and Megumi, and then we divided up, looked at it, got together, made sure that we were in agreement as to the numbers, and then I think it was Megumi actually typed this up. So it looks much nicer than my handwriting. And then from this, I looked at SSGs, and I was amazed. Our portfolio looks really good, the stocks in them. But we also determined that we have 14 stocks with 11 members, which means 3 people have to do 2 stocks. And I know when I do the club visits, the recommendation is 1 stock per member, for the stock watchers. And the reason for that is so that the person can take the time and thoroughly dig into that company every quarter, and keep an eye out should anything untoward happen during the quarter prior to the SEC filings. So we took it as a goal to try to get down to 11 stocks. And as you'll see later, we did not quite do that. Hopefully the next stock study committee or 2 can get us down to that level, or we can get another member. But what we came up with was, as you can see here, the sales for Middleby looked a little down, as did the earnings were not as good as they had been. And then Matt and I discussed that should we get rid of both of our REITs, and we decided we ought to keep one. Normal investment clubs are told not to, or it's strongly suggested they don't own any REITs because of the accounting problems. Since we don't have the accounting problems, and you might want one in your own portfolio, we thought we would keep one sort of as a training tool, so we can learn as we go along. So anyway, this is how we started, and like I said, we looked at the SSGs and came away, and now we're ready for our excuse me, our actual stock report. But any questions on what I've said, or in what we attempted to do?
I have a question, Roy. So when you do a
Sure.
portfolio review, you know how Hanny did the pie charts. So you're looking at the distribution of, that we've got stocks and, different categories.
I am.
And then
that's one of the things I do. I looked at, the portfolio. Are you overweighted in a certain area? And we are, as Hanny pointed out, in technology. The trouble is, the companies we have in technology right now are really good looking companies. So we didn't necessarily want to get
Roy,
those.
just to kind of to address that a little bit, I'm currently reading a book on Warren Buffett, and so his philosophy is that he just finds good companies, and he doesn't worry very much about diversification. If they're good,
I agree. Go ahead.
If the company's doing well, if it's a solid company, why would you want to sell it? So it's there's two sides to the argument, I guess, and I'm not sure you know, which one is right, but you know, I think you can argue it both ways.
Yeah, one of the things, you know, he likes to make, you know, these statements, sometimes grandiose, sometimes very logical, but he said something to the effect that diversification is for lazy people. I don't necessarily buy into that. I mean, Better Investing certainly doesn't, but you can be overly diversified. But I think if we're going to follow BI,
I think that
we should try to match it as much as possible without, and even they'll say you don't have to be rigid about it.
I think diversification for the purpose of diversification is what he objects to.
Yeah.
Just to be diversified. So anyway.
Right. So we've got that tension, like Annie pointed out. You know, we got one side, you got the other. Better Investing suggests that you get diversified, but you don't have to be in every sector, let alone every industry. And, you know, you can get just as much safety with 12 stocks as you can 50 stocks. The risk falls until you get to the 12 to 15 point, and then it levels out. So, you know, I think we're looking good there. I think we are too high, though, in technology, and I will address that probably at the end.
Can I make one point about technology that maybe somebody else has some information that I've sort of been noticing? These tech companies tend to be diversified within themselves. They don't tend to just be a tech company. They tend to have putting their fingers in many places. So I've just been thinking that lately. I just wanted to bring it up.
Well, yes and no. I mean, two of them, Skyworks is in chips. They're in different phones. They're also now in the Internet of Things, but they're a chip maker. IPGP does, you know, lasers to cut metal and that.
I agree with those, but there's many big companies that are diversifying within themselves.
I mean, that's the trouble. We don't have it, but like with Apple, you'll see it placed everywhere because they don't know whether it's a tech company, a service company, you know, what to do with it. And I've got my portfolio against Microsoft, but you know, I'm sort of out there on my own doing that. So yeah, no, you make a valid point. It just, I don't think that necessarily fits with our company.
I agree. Yeah, the ones we have are not that way. But
good quick question here. IPGP, is Value Line predicting a negative total return?
No,
go back to the previous.
That's what the says. I mean, the Value Line report showed.
Okay.
They're on their own. Everyone else rates it much higher. So I don't know what it is that Value Line saw that no one else sees.
But technology's in everything, and it's so important for almost every industry. I don't mind being a little bit over diversified into technology. I mean, myself. Oh, go ahead.
So, Matt, you have anything you want to add to the general discussion?
No, I guess the only thing on the Value Line, so that has to do with the price. All the other values in there are just having to do with the sales and earnings. So Value Line is basically saying they think the price is going to go down, even though their earnings are going to continue to go up. Yeah. Because that's the only clarification.
And maybe what it is they've gone up a lot. It's my third highest stock in my own portfolio.
Right.
OLED had been the best, but they fell off in mid-January, and Skyworks is still right now is the best for me anyway. So I think they think the price has got a little ahead of itself, but the company itself is still solid.
Right. Yeah. Good point.
Okay. I guess with that, should I do Middleby or do you want to do the REITs?
You can do Middleby first. It's probably a better one to talk about.
Let me see how I can. Okay. Matt, can you bring up my SSG? Or maybe I don't know how to find it. Where did you put it, in the SSGs? Yeah, there it is.
While we're just waiting here, if I could make a quick comment. Tom, I just checked the portfolio in my iClub, and when you look at the portfolio, it's not sorted by gain loss, dollar or percent. It's a random sort. I think it's alphabetical. So what I did was I had copied it and put it into Excel, and generated the chart that you were looking at. And in doing that, I forgot to take Biogen. It didn't copy over. That's why it's missing.
Okay, here is the SSG that I did for this study. My forecast numbers are a little lower than the previous one that was done. But as you can see, besides the sales had leveled off, pre-tax profit and earnings have dropped a little. And then free cash flow has dropped quite a bit, and the debt has just zoomed up. So those things concern me.
And it's going to keep going up too, I think, right? At the point.
Yeah, because they announced that they were borrowing to buy a company, or to finish the purchase of a company, which I know a lot of companies, or not a lot, but some companies seem to thrive with purchasing other companies. I know LKQ is that way. They'll buy junkyards all over the place. But they incorporate it well. From the results that we got with Middleby, I question whether they're too acquisition happy. And I'm not sure all of the acquisitions they've made this past year have been fruitful. Although they did actually have a positive revenue because of the acquisition, the revenue that those acquiring companies had. I don't know if it's only since they've owned the company or if they took the whole fiscal year for those companies. But the existing companies within Middleby actually was down in revenue. And I have that on that other sheet that I wrote the sort of treatise on. But one thing I noticed when I was going back over this and trying to see why my SSG differed from the previous ones, I think the online tool has a fatal flaw. I did not realize it's suggesting the average high PE. And what the previous SSG used was actually these average numbers, the average high and the average low. And I was always taught that's very optimistic. You should be a little bit more conservative. Plus, when you look here, you can see that the high PE has gone down. And so even if I were to try to use the average, I would use something less than that because it's been going down. This 30 is based on prior, the top 3 years, not the last 2. The low is a slightly different issue, but 2015 they really had a high PEs. But I will go to this, and if you go to the core SSG, which we all have, either you have the core SSG, or if you have SSG Plus, you can press this button and get to it. What they do, come on. They have here, enter your average high PE. And in their education portion, they say that average high PE is determined by reviewing historical data and current PE primarily, and competitive information as well. So you're not, and the way they teach it here with the core is the way I was taught, and I think it should be used. You can look at the historical numbers, but also see what the analysts are coming up with, because they may not jive. You work it all in the mix and see what comes out. And so I think we ought to, when we do our SSGs, we ought to be cognizant of that and not just automatically jump at the averages that are posted in the SSG. Let me go back
So
here.
maybe you would start off with the core and then switch later to the.
Well, for newer people, they definitely need to start with the core. I don't feel the need to, because I've done the sufficient number of these. I know how to do them, but I think they're wrong, and I'm going to try to address it with headquarters and get them to change the.
But Roy, I think if you click on the Roy, if you click on the 143 on your screen, that'll open up if you can.
Oh yeah, it says your average.
It says your average, so you can.
But what I've seen with a lot of ours in our group is they just automatically have used the
average.
The average, and I'm just cautioning everyone to be a little resistant to that. The other thing, I projected a 9% growth rate for earnings. Doug Gerlach and most others I respect recommend nothing higher than 1.5 times that. In the original SSG, it was triple that, which is way high. 14.5 with this kind of a high PE average would be, I think, too conservative, just out of bounds itself. So I did double it to the 18. And anyway, I get the high price of 143, and the low was, I used 15, so, a little bit below the high with the trailing 12-month earnings. And I get an an upside down ratio of 1.6 to 1, which normally, it's hold, and it's a good solid hold. But let me go back. Let's see. As I said here, the sales were up 10.3%, but they were exclusively the result of acquisitions. Organic sales fell to a negative number. And the long-term debt has increased tremendously. Free cash flow has dropped. And the cost of steel, what I call it, cold rolled steel, is increasing, and since it looks like we're going to, or hot rolled coil steel, as the trade war seems to be going in full force now, or soon to be, their cost of materials is going to go up, which is going to cut into either sales, or if they eat the price, it's going to cut into their earnings. In either respect, I see the price, stock price going down. And so based on that, even though my revised SSG is a hold, I think all of us in the committee are recommending that we sell middle B.
I like.
You want me to pull up any other documents that I had, or any discussion?
I was just thinking about the steel price. The whole everybody, all their competitors face that same issue. But you know, I'm still not opposed to selling the stock, but it'd be an industry-wide thing.
Yeah, no, that's probably very true. It just with this company's debt going up and its free cash flow going down, I did not get a good comparison to see what the others are doing. But other stocks I've looked at are just the opposite. They're still maintaining a decent to no debt, and some are either holding the same or actually increasing free cash flow. So it could be just that this whole industry is something we ought to avoid for a while. And until I was reading more about its acquisitions and the fact that it was its organic sales were actually down, it made me question whether management is doing the things they need to do. Other questions?
One tool I've often used to, I'm not sure, I look at the insider sales to see how if the insiders are selling or buying, and that's helped me a couple of times. You can get that from Yahoo.
Yeah, that's actually something that I just started doing yesterday, and I did not do it for this presentation, but you've convinced me to take a look at it.
Okay. Yeah. Well, thanks, Roy. And I agree with whatever you say. Thank you.
Okay. Other questions? Okay.
Sorry, can you recap again why you project a high P 18 if the average P is about 30? Or I can understand if you do less, but why is 18? Why is the weight this much low?
Okay, why didn't that come up? Because number one, it's been falling from high PE of 30 to 27. So I'd want to go at least in the low 20s. And with a 9% growth rate, I'm already at a 200 peg. And that just seems extremely, even that's a little high, but matching it with the 27, 14.5 sounds far too unreasonably low. So I did pump it up, but I just cannot go more than 2 times. And even if I did and say it came to a 2.5 to 1 hold, I still would recommend that we sell it based on the fact that the economics for this company and this industry just look bad to me.
Okay.
What's the earnings growth that you put on this one?
9%. Yeah, and that was based on our research and looking at what the previous one was. And you can see last quarter they had a negative 5%, even with
right. And 9
growth.
seems pretty optimistic given recent past.
Well, I don't worry about one quarter as much. Hopefully it was some fluke that they could bounce back from, but that is of concern. And I did double check, or in fact triple check, to make sure this wasn't because of the Tax Act, and it wasn't. This was just increased cost of goods plus the oh shoot, I lost it there. Cost of goods, and debt payments. So those two things have cut into their earnings. But it's not tax related, because you can see the pre-tax profit and the earnings per share are dropping pretty much the same. So
one thing, Roy, that I've read in some of the early better investing literature is that when looking at these average PEs, the highs and the lows, one should always look at the outliers and take those out. And I think we have a tendency to go with with the averages without sort of taking a look at the outliers for certain years. And it's, I mean, in what I've read, they were being pretty aggressive. They would take out, say, the top 3 or something that were out, and so I think there's got to be some judgment there, but still, like the 37 that you took out and the 27 would make a lot of sense, and maybe the 15 as well. So then if you play around with those, you get a sense of where things might end up.
Well, yeah, the 15 I wouldn't take out, because number one, it's 15.8 and there's a 15.9. So which one, or both? And I tend to take out the highs, not the lows.
Yeah.
So I know, because sometimes if you take this out and that out, it's the same as the average. So that I learned through experience. When I would do that, I don't put the same average. Well, why is that? Well, because they were one was high, the same amount as the other was low. So, I'm looking for a conservative but logical number, and so with that, unless this was like a 3. I would probably take that out as something bogus, but 15.8 to 20 is close enough to in my book. So anyway.
So it sounds like you wouldn't buy any of the companies I showed that with the 700 PE then, I guess.
I shudder every day. But I did recently, about a month ago, buy one that's got a 200 and something.
Wow.
But it's the old Taser company.
Yeah.
And I figure every police company, or every police department is going to be buying both Tasers and the cameras. And there's a reason why the price has gone up tremendously. I just wish I bought it last year before the jump. So anyway, yeah. All right, should we turn it over to Matt?
Sure.
If I can get I'm not getting my panel back. There we go. So now how do I sharing?
Just right click on his name.
I just did.
Okay.
Oh, you did. Okay.
All right.
Okay.
Is that how you do it? Thank you.
Yes,
Okay.
that's how
Can
you
you
do
see
it.
me?
Right click on his name.
We see you, public and realty.
All right. Hear me too, I guess. Yeah. Okay. So this is O. We basically just took a look at O and PSA because I guess if you go back to this spreadsheet, they had some of the lowest earnings growth estimates, and we said 2 stocks in REITs, and there's not a whole lot of difference between them. So just trying to get down, the number of companies that we're looking at, just at least choosing one between the 2 of them. So that's kind of what I looked at, and you can see the recommendation in the end is to sell O and then use that money to buy PSA. So at least we're maintaining a REIT in the portfolio and roughly the same percentage for diversification purposes. But, okay, that being said, if we go back to the SSG for O, So in the two SSGs that are saved in the folder, what was done there is essentially just use the midpoint from the value line earnings or FFO growth estimate. So for O, it was 4%, which we have entered here. And for PSA, it was 5%, which we have here as I flip back and forth. Okay, I'm going to go back to O now, which is this one. So with that 4% earnings growth and 9% sales, which I also believe is what Value Line recommended, or it was loaded previously, you click over and you can see we're still in a buy with the 22 price to earnings ratio, but we're recommending to sell. So if I click over to PSA with their 5% earnings and look at their SSG, they are actually in a hold. So you say, okay, you know, what are you doing that for? The SSG says what it says. The main reason for recommending PSA over O is PSA has a little bit safer, we felt, just because of how they're financed, so they don't have nearly as much debt in comparison to O. So if you look at the percent debt to capital, they're currently at 22%, averaging 10%, versus O's, which is almost 46, almost 50%. So we felt that, given especially rising interest rates, is much more of a negative for O. Also looking kind of at the business models, so more qualitatively, we felt if there is, recession is on the horizon, O primarily finances retail spaces, or I'm sorry, manages the real estate of retail spaces, so restaurants and strip malls and things like that, versus PSA, which is just those public storage units. So we felt people are always going to be moving, so that makes them just maybe a little bit safer play should there be a downturn in the economy. But otherwise, I guess earnings wise, sales wise, all of those kinds of things, they're almost pretty much equal. So even though we have O in the buy range, kind of looking at their projected return, they're at 9.3% versus PSA. So I scroll down here, is at 8%. So the average projected return, 8%. So realistically, I think between the two, I mean, to me, these are almost dead equal. Maybe PSA's price is a little bit higher at the time, but they both seem to track each other pretty well. So that's why we're recommending to sell O and then just use that money to buy PSA to keep the diversification the same.
Yeah, let me just interject for a moment. One thing you have to be careful of is, we want to look for quality companies first before we look at price, because you can get into a value trap. And it seems to me that the quality of realty is a little bit less. And when you go back to the first page with the debt and the
sorry, that was PSA.
Return on equity being down, pre-tax profit actually is a little down. It says even, so it's pretty close. But if we were doing this for a new, as a new company, that barbed wire comes across and we never reach the price. So I think the reason why it looks like a buy is because it's just not that quality a company right now. And it's sort of fool's gold. It looks good, but it really isn't. We think that the PSA being the storage Matt mentioned the business model being better. It seemed to me that when people, if the economy turns down like it did in the recession because of these trade wars or whatnot, or just the normal ebb and flow of the market, and companies start laying off, people are going to relocate or at least downsizing, and they'll need storage space for furniture or whatever, short term or long term. Likewise, when people are relocating, they often get storage space one place and the other. Maybe when they move, they'll put it in storage until they can land a place that they want to, be able to move to live longer, and then they'll take it out. But
Roy,
it seems to be hold up better during a recession.
Just one question, Roy.
Yeah.
So if I look at the portfolio report, it had and especially on Manifest, PSA was much better quality. It was 81, and O was lower quality, but I think it was like 46. So it's near the bottom. The projected annual return is 2.7% for PSA and 6.3 for O. So my question is, if within a rising interest rate environment, a lot of these REITs have mortgages, and those mortgages would go up depending on when the renewals were. So I don't disagree with what you guys are proposing, but why would we buy it at all? So if we're just using it to study REITs, I would keep it, but not necessarily buy more of it. I'd look maybe for something else that has a higher projected return.
Yeah. I agree. To answer your question, Matt and I, talked about that, but we think, ought to at least try to maintain the same level, and so put that money into PSA. But I'm not, adamant about it. So, Matt, you have a response?
Yeah, I mean, it was just to maintain the diversification. I think if we sold O and didn't buy more real estate, we'd only be at like 3% maybe of our portfolio. Yeah,
but I mean, if there's a better company that's going to give a higher return, we should be maybe looking at that. And the reason I think we selected a REIT in the first place was just to more or less learn about how to analyze them.
Yeah. I think part of it too was we have a lot of cash right now, so we can buy stuff. If we didn't have any cash, if we were fully invested, then probably, we would say let's pile that money up from realty and buy something else.
I have a question.
But we could end up with a whole lot of, percentage of our portfolio being in cash, I think was entered into it.
Can I ask a question? Can you hear me?
Yes.
You just did.
Yeah.
Go ahead.
You said fool's gold and it looks better than it really is. I didn't quite understand it. Could you explain that with reality income, what you were referring to?
When you fall into a value trap,
which I don't know what that means.
You've got a company that is low price, and because it's low price, it looks like it's going to have a great return, but the quality is why it's a low price, and you can end up paying too much for a not so quality company.
Because in the future, it's not going to do as well, is what you're saying, basically.
Right.
Okay. All right. Thanks.
Yeah, I agree with Haney. I think we should just keep the cash and look for better opportunities. And this is only for learning purpose. That's why we are still keeping PSA. But in reality, we should have sold it.
I felt the same. That keep PSA is only for education purposes. But personally, I don't feel like we should invest more.
Why?
If whoever is going to make it based on the quality, I really don't see PSA is this really high quality growth REITs company. I don't feel that.
You mean the
Maybe
growth?
it's better
because
than
it's the safest company in our portfolio.
Okay.
No, I wouldn't say that, Matt. I mean, from a quality perspective, we've got a few others that are much higher. But I think like so when interest rate goes up, a lot of these companies, you know, they carry a lot of debt, and that debt has to be serviced. And when those mortgages come up for renewal, they're going to be financed at a higher rate. So that's going to, you know, eat into their margins. And so, you know, I'm not sure that the returns will be there in the long run.
Yeah, maybe we could get rid of both of them.
Well, we discussed that, but we decided, you know, this is an educational group, and you might want to learn about REITs in your own for your own portfolio. So we flipped the coin and decided to keep it. But you can make a motion to sell it when the time comes.
Roy, can we back up a little bit? I'm going to ask a question.
Sure.
About the EPS, you have, I think it was the other, what's this one? It's the other.
This is PSA.
Yeah, on
O. O?
Yeah, you have the EPS at 4, and then remember you were talking about the average high PE on the next page, not being more than double. But we have it at 22. Would you bring that down?
And keep in mind, this is FFO too, not earnings.
Oh, that's right. I forgot. But would you still bring it down?
Should the calculations about same? So, well, let's see, 23, 20, 19. 20,
I mean, that's like 4 times.
Yeah.
5 times. That's 5 times the EPS.
Also, should you make a bit more conservative, even though average is 22? What about cross to 2016, 25, like cross out the high ones? I don't know. If personally, I will bring down a little bit in the high PE.
But who covers
Maybe
this one?
Me.
What did you have in the last quarter?
I was just looking at it. Let me look at my next page. I had 20.
Okay.
But my earning per share is a little bit higher than yours. Mine had 5.6.
I think it's come down since the last report because we just went off of value line.
Okay. I document the reasons why I gave 5.6. Let me have a quick look. I think it was my annual report. Let me have a quick look.
Okay.
Yeah. So
Roy, where did you get the rule of thumb about, was it 4 times the earnings for the high PE?
1.5 times.
1.5.
1.5.
I got that from Better Investing, and in one of the Doug Gerlach's last webinars, he mentioned it again. He doesn't like to go above 20 for growth rates and 30 for the high, or whatever 1.5 times whatever your growth rate is. So, you know, if it was a 10, he'd use 15. If it was 20, he would use a 30.
But use 15.
But that's the max.
For what though? What are you saying he would use it for? To make all the high and low high PEs or what?
I'm sorry.
What would you say you would use? Understand the peg of 1.5 or 2, whatever you use, but would use that to be the point at which you wouldn't buy above a price earnings growth of 2?
No, not buy. Just calculate it. So it may calculate still a buy. I've had it when, you know, with pegs, you know, below 150 or 1.5 times. And it could still come out as a buy. Maybe it won't. Maybe it'll come out as a hold. So you can't say just from that that criteria. That's how it fits into the whole thing. But the reason for that is, you've got a peg, and that's what you're estimating, now. But 5 years from now, is that PE going to be doing as well as you've projected? Because you're projecting a higher, PE than your growth rate. Some people would say, "Oh, I won't go over a 1." Whatever my growth rate is, that's my PE. That's too conservative for me. But trying to go in a normal stock, normal company, a manufacturing or service company, is it going to be able to continue such a high PE? Say it was your average was a 40. Would you consider 40 out there 5 years from now? Probably not. It's probably going to fall sometime between now and then. Amazon notwithstanding.
Or Netflix.
Yeah. So it depends on the company, the industry. REITs, I know that Matt and I presented them. I know a little bit about it. I know enough to be really dangerous because I don't totally understand them. So those numbers, are kind of monopoly money to me. But for a regular, if we were looking at General Mills, I could tell you more accurately what I thought. So I hope that helps. I don't know.
Yeah, I understand what you're saying. I'm pretty sure. Thanks. Just that
I feel comfortable to sell.
Some of these stable companies, though, like you mentioned, General Mills, they're going to have high PEs, even though their growth rate is small. And that's because people take into the fact the stability of the company over 20, 30 years. So there's exceptions to that.
Oh, yeah. And I wasn't throwing, I just threw that out because I eat Cheerios, but I've never bought General Mills. It's never been in my buy zone.
The high wheat, the high grain Cheerios are the
No, just plain old run of the mill.
Yeah. Should we move on?
I've tried the others, and I'm a plain Jane kind of guy.
Okay. Are we ready to move on?
Yeah. Okay. You want to give me the screen again?
Okay.
Sure.
Are you going to do it, Matt? Okay. Or you want me to do it? Want me to do it? Let's see.
Let's see if we can do it. There you go.
Yeah.
All right. In case any of you are wondering, that's the Anchor Steam Brewery. Okay, why isn't that showing up? Okay.
That's not where you make meth, Roy?
Yeah, if I'm not home, you might find me there.
Okay.
So back to Google Drive and argument. We need to pare down the numbers. Is that, no, that's the wrong one. Okay. Like I said, with the exception of the three stocks we've talked about, we have a really great portfolio. But my concern is that Facebook is way too high a percentage. If you recall the pie chart that Hanny showed, it's huge. And in fact, I was going to go back in and change these numbers a little bit because I got these from the Stock Central, which is or iClub, my iClub information, because that counts cash, where with the Morningstar portfolio, we had excluded it. And just looking at all our stocks, it's even a higher percentage. I think it was closer to 18. And for a portfolio of 14 stocks, going to be about 7%. So it's more than double what the average would be. It's the highest percentage of stock in our portfolio. And I know going back to the year 2000, my club had Sun Microsystem, which not from purchases, but just from growth in the stock grew to 65%. We did pare it back to 35. And then when the dot-com bubble burst, it crashed and burned, but we fortunately had pared it down. You know, this bull market could go on for another year or 2 years, or, you know, around the corner with the infighting with China and European Union, all our stuff could go.
And your biggest trading partner is Canada.
Oh, we ignore Canada. Come on. that's true. You know, Canada and Mexico.
No, Canada's a threat.
But the you know, the other thing is, you know, I sold mine when Congress started looking at this and Zuckerberg testified. I thought if he's the face of Facebook, I'm selling. Now, the price did go down for a couple of days and then it bounced back because, you know, not to put a negative comment on it, but, you know, the grandmothers like to use it and show their grandkids. And I'm on it still. So, you know, it's still in use. But the EU is, you know, is investigating Facebook, and those guys are nuts. You know, I don't know what they're doing in Belgium, but I have to wonder sometimes. But, you know, they could come down really hard on Facebook. Plus, after I wrote this, there was another disclosure that Facebook had given out private information to another third party. And, you know, I just think they're reckless. But, you know, people are still buying it. So I'm not recommending that we sell it, just that we pare it down and bank that money for buying other stocks like have been recommended. So I can go into this more. I don't have really anything bad to say about the numbers. It's just their philosophy just troubles me, and the fact that Congress and the European Union are investigating them. You know, something could come out, you know, tomorrow, day after tomorrow, you know, 6 months from now, and the stock could turn. So it's just just a conservative recommendation.
Now, so what should we do with the money then?
Well, that'll be there for the next stock study committee to come up with some great stocks. And my recommendation, you know, for what it's worth, is we don't just come up with a new stock unless you're going to challenge an existing stock. If you find a better one, then we'll sell whatever we own. Because our goal this month was to try to get it down to one stock per person.
Yeah,
so
that's what
if I was going to do next month, I would not be buying to add a company. I would maybe substitute a company or buy more of what we already own.
Because if we're paring the number of stocks down, then all our new presentations need to be challenges.
Yeah, I agree.
Mm-hmm.
But I just couldn't disagree more in a way, because Facebook is the one that's performing the best. Why would you sell it? And the advertising, if you have a business and you want to advertise, use Facebook. I mean, it's a real winner for.
Have you ever bought anything from the ads on Facebook?
Not me, but the statistics don't lie. The earnings are going up like 40% a year.
I understand that.
So,
but
I'll be wondering.
It's just
And I think Mark Zuckerberg, I didn't sell when he came on TV. I was impressed the other way. I think he's quite a.
I think you were alone in that.
Well, okay, but another thing
I have a
too,
comment.
he only earns $1 a year running the company. His payment, that's all he gets paid, plus the shares he owns that's his livelihood, is the shares he owns. And his salary is $1 a year. I think, and he's got these several products that he's just beginning, like Instagram and the virtual reality. Several products that he's just beginning to monetize. Personally, I would never sell Facebook. Not yet. Not for a long time.
Well, I'm not
quite
recommending that we sell it, just that we pare it down as a defensive measure.
I have 2 comments. Comment number 1, I bought Facebook until after I attended their annual, the stock, what do you call that? I have been speaking Chinese, so suddenly I forgot the English term. Attend their stockholder meeting. No, stockholder meeting.
Yeah,
So
so
years ago, I missed
Chinese,
it last year. Right, last year, I was impressed by Mark Zuckerberg. If it was not him, his sincerity, he talked about the plan, what he wanted to do as the community, all that, I probably wouldn't invest. This year, I missed their stockholder meeting for logistic reasons. The second comment I have been asking about myself. So looking at all the social media companies, the Tencent, Facebook, or even Google, they have such rich, personal the data that they have been collecting, right, and the consumer data. So I have been wondering about if, despite that, they are going to use these data to, making their products better. But I'm wondering if they are going to sell or to give to third party. They, Roy, you mentioned about they provide their data to third party. So do they use it as a trade or sell? Or I have been wondering about, because these days that data is money. What do they
give
do
it away
with
for free, Jay. They give it away.
They give it away for free? Give to the government? Or?
They give the data away for free to advertisers.
Yes.
So they will put more ads on their platform.
Okay. Because I know in China, like in Tencent, I'm sure I have been wondering about this for Tencent, like what do they do? Who do they give to? Third party. I felt if it's free, I feel like I don't know. Okay, for Facebook, so it's free because they want to sell more ads. So I give you, okay, that kind of makes sense. For Tencent, maybe they give to government. I'm just guessing. So, yeah. Okay. Just a thought.
The recommendation to sell is maybe less so on Facebook.
Because we purchased it 3 times, right? Yeah.
Right. Just more diversification.
Yeah, I agree. We should consider paring it down. But should we wait until next month when we do the second quarter report?
Yes.
Let's wait. We
Not
got
bad
something
idea.
better. I don't think we'll find anything better.
Yeah,
But-
we can. I don't know. Possibly it should be pared down, but we should do it after the earnings report next month.
Bernard, you seem to be thinking that I'm saying that we sell Facebook. I'm just saying we pare down a few of the shares.
Yes.
Yeah, well, that would be selling some, but okay. Well,
Yeah.
We just vote. We'll vote.
what
I guess what
like-
would be the reason for waiting, Jane, until after the earnings?
Yeah, we should just look at second quarter.
Yeah, why? I guess I'm curious why you think that.
Because when we want to pare it down, then we also look at whether it's the company to pare it down.
I mean, I guess one, it was my recommendation that we pare down. By waiting till the next month when we do all these quarterly reports, and if the stock study committee recommends adding to the stocks we already have, maybe that'll change the dynamics and the percentages, and where perhaps Facebook won't be as startling high as it is now. It just right now it just seems really out of bounds with the size of it in our portfolio.
Because of performance.
Well, yeah, but you don't want 80% of your portfolio in one stock. You
But it's not 80.
No, but it's close to 20, and that's a little high.
Can we just vote?
So anyway, that's the presentation for the stock study committee. Megumi, you have anything you want to add?
I think she's muted. I think she muted herself. You need to unmute yourself. There you go.
No, I'm just listening.
Oh, I'm going to teach you to be more forceful.
My head's spinning. No, I'm good.
Okay, Matt, anything more, or should we turn it back to the
No.
everyone else? Okay. Let me see here. Attendees. Oh, come on.
I'll do it. I'll take it.
Oh, let me do it. Come on.
Oh, sorry.
I got to learn how to do this.
You do it.
Okay, it's yours.
Okay. So for the stock study committee this month, your conclusion is to sell sell partial of Facebook and sell MIDD, right?
Right.
Well,
okay. Or buy more.
Don't we have to do motions and all that?
Oh, yeah.
Yeah, I know. I just want to.
I figured you was just clarifying.
That's your conclusion.
Okay.
Yes. Buy more PSA. Okay.
Okay. So would anybody like to make a motion?
So are we at that point?
Oh, unless we want to discuss.
Okay, let's do it.
Do we want to discuss the motions?
Well, we can do it when we make our motion. I make a motion that we sell Middleby.
I second the motion.
Okay. Is there a discussion?
Now, I don't see my ballot. I didn't see the ballot link. Did you send that out?
Yeah,
Yes.
she sent out yesterday.
Yeah, yesterday.
You probably, you do a search stock voting ballot. Yeah.
So are we ready to vote?
Yeah.
Well, sounds like it. I don't think anyone wants to keep it.
Even though it looks good, huh?
I want a bigger house.
I thought there'd be more questions.
So I can get a Viking stove.
What?
I want a bigger house so I can get a Viking stove, but other than that.
But they have all those quality problems,
Yeah, well, that's why I'm not selling anything. We bought stuff 30 years ago that we keep repairing as needed because it's just so good.
Oh, there you go.
Okay, so the motion was to sell Middleby, right?
Yep.
Yeah, now why isn't this?
I got lost.
When I submitted it, it says sorry. I got a error message.
Did you submit again? Just hit submit again.
Yeah. Okay.
It's not working.
Okay.
Did you get mine? How many votes?
Yeah, I got yours.
Through?
Yours came up, Tom.
Oh, there it is.
Okay.
Never mind.
Okay.
I vote yes. I don't know how
Okay,
to.
all right.
I vote yes.
Okay, it's unanimous.
Okay.
Okay. All right. So, Hanny, you got that registered? Is Hanny the one that does that?
Yes.
Yeah. Okay.
So the motion has passed before you delete.
Yes.
You already looked and passed the motion? Okay.
Yes. Motion passed.
Okay. Okay. All right.
Okay, we're ready for the next one.
Any other motions? Matt?
Am I allowed to make them? I guess I don't know the rules. If you
Yeah.
presented the stock, you can motion even if you're a presenter.
Yeah.
I can make a motion for you. I will make a motion to sell. Oh,
Hello.
yeah. Go ahead, Joanne.
How come this isn't clearing?
You already did, huh? There's zero response. You already cleared.
Okay.
These
Oh,
are
I
the
see.
12
I see.
respondents
Okay.
for
All
the
right.
next one.
Okay.
Yes, you
Okay.
already did. Yeah. Yeah.
Okay, next motion.
We have a motion
I
to
make-
sell O. Do we have a second?
Oh,
I second.
What's this one? Sorry, what was the motion?
Sell.
Sell.
So
Oh,
Second.
All right, let's vote. Any discussion?
no.
Okay.
No.
I vote yes.
Bernard, we're going to have to teach you how to do this.
But when I try to do it, then I lose my webinar and I just.
You need to delete everything on your desktop except VICS.
And Bernard, do you have a phone? You can. Bernard, you could vote through your phone too. I mean, if you can pull up your email on your phone.
oh,
Oh
he
no, I
doesn't.
can't.
Okay, 100%.
Mine's landline. Mine's a landline.
Okay.
100%. Okay.
Okay.
Yeah.
All right.
Megumi. Oh, second. Oh, Andrew and yeah. Okay.
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 All right. All right, Hanny, you got that registered to sell O?
yes.
Okay. Any more motions?
So how much cash do we have at this point?
We would
question.
probably have, I think, just a second here. Give me 1 minute.
I'm just take a guess, like a 4,000.
5,000 probably.
5,000.
And that counts today, this month's?
No, 6 counting today.
So, okay.
Because we had 3, I think, and then
So we should have fun next month buying like crazy.
Oh, are you including the 2 just sold? Or no?
yes, including the cells.
Oh, okay, including the sales. Okay, 6,000.
Yeah.
I will make a motion and then put on my fireproof gear to sell a portion of Facebook.
How much?
Second.
Oh, no, Matt, let him say how much. Did you say how much?
We have invested what, 6,000? 6,000 Facebook? $6,000 in Facebook we have invested?
Yeah, Roy, do you have
Yeah.
I think we said a third of it, right? Because we bought it 3 times.
So sell 2,000?
Mm.
Yeah, that would put us down to a reasonable percentage. Still higher than all the others, but it'd be reasonable.
I don't mind.
So my
Carry
recommendation, my motion is to sell 1/3 of our
Okay, 1/3.
Yeah,
Facebook.
that's fine.
1/3. Okay. Anybody second it?
I'll
I
second.
Yep. Second.
Okay, vote.
I vote no.
Okay.
Hold on. Waiting for me. Just
Ditto.
a second, my internet. Hold on. Okay.
Well, shoot. So,
What's the result?
well,
What's the
no waiting. I wonder if would Bernard's make it 50-50?
Bernard, yes. No, he will actually it's tie. If Bernard voted, it will be tie. So it really depends on Andrew and
Mina.
I forgot. Mina, yes.
I thought Mina was on the line.
Where's Mina? He was there. He was, yeah.
He's not still there?
It's Mina. He left. He left.
Oh.
Yeah, no, he's not.
So what do we do?
Yeah, it's a tie.
Well, it seems to me that the motion did not carry if it's did even.
Yeah, Mary. Yeah,
Okay.
motion
We
did not
don't
carry.
have, it's not like the Senate where the VP can break the tie.
Will you go to penalty kick?
Yeah, we want an additional 5
shootout.
minutes.
Yeah. Yeah.
Actually, I voted yes.
What'd you say?
Oh, so you changed your mind?
No, I mean, just now I thought, on the second thought, I thought it's good to take a profit for 1/3 portion. So I voted yes.
Okay.
Okay.
So I think.
So yeah, you voted yes.
Megumi, you said that we should challenge it anyway next month, right?
No, I said.
That's Jane.
Jane.
That was Jane.
Yeah.
Yeah.
So maybe that.
So we can challenge it next month. Yes.
Although, guess what?
I don't mind.
Guess what? We don't.
There's
have
no stock study
next month.
Well,
Well,
right. Jean follows Facebook. That's why she was saying she wants to take a look at second quarter. Then she decided that she was saying she
Okay.
follows Facebook.
But next month we don't have a stock study because we have, I guess, 11. Well, actually, we don't have.
Right.
Since we don't have
But-
middle
but-
B or O.
What we can do, I think, is those who are doing the reports, like I'm doing Skyworks. Let's say I decide we should buy more Skyworks.
Uh-huh.
Not only give you my report, but an updated SSG,
Mm.
and make the motion then.
Oh, if it's in the buy.
Right.
Yeah.
Okay.
So.
Oh, we bought a Comcast to do it. I forgot
John
that.
could do it with FleetCor or whatever.
Yeah. So I should take middle B out.
What is the vote? What is the vote count right now?
5-5.
Okay.
So
Right.
Jay,
Yeah, I agree.
Jay, you don't have.
Even though we don't have stock
I'm
study
following
next
that.
month, we can select companies in the quarter review for purchase or something we already sold, like HSCLP. We can look at that if I think it's a good buy. I will propose.
Well, I think that would be up for the stock study committee to come up with. But if you're doing your quarterly report and you think so highly of your company, you want to buy more of it, I think you have that latitude. I just ask that you do an updated SSG. We don't normally do an updated SSG between the annual reports, but I don't like to make buy and sell decisions without looking at a brand new SSG. So I urge that we do that. If there is, I mean, I'm not saying we're going to buy more or that I'll recommend buying Skyworks. I was just throwing that out.
And I think at one point Andrew said to buy more Disney. At one point, he said.
Yes. I have a question to Joanne. So since our meeting got extended for half hour, also we deleted the 2 more companies. Do you think we will have enough time to do stock study or do a challenge or something?
Oh yeah.
For next month.
Yeah.
It's up to. I feel like everybody felt super rushed during the last one. Maybe we do an education piece with these reports. I don't know.
Okay.
It depends. I mean, I felt everybody felt like they needed more time for discussion.
I was wondering if we can look back the watch list, the one that we have been presented, for example, Mina and Andrew presented a biotech, right? And B-cell presented, well, I can't remember what other. So just look the ones that we have been presented, we put on the watch list, but nothing new.
But that if we bought one of those, it would still increase our number. So I think it would be incumbent on the new stock study committee to look at that and use one of those as a challenge stock.
Right. So I was just wondering if we should have a stock study committee for next month. Just look at these 5 companies.
I think when we get to be a well-oiled machine, we can probably squeeze that in. But right now, I think it's taking too much time, and we still need to refine how we present quarterly.
Yeah, I
So
agree.
I kind of go with Joanne that no, let's don't.
Yeah, let's just
But
do. Let's
again,
Okay.
if someone
Let's
really
do-
feels strongly about their stock, I think we could accommodate one or two
Okay.
recommendations.
Yeah, let's
That's
see how.
my-
Okay. So
Let's see how we do
like
stock. This group of stocks for the quarterly reports, so that we can do a good job and everybody feels good about it. And then if we have time left over, then the next series, the next quarter where we have to do all the reports, then we can add in a stock study.
Okay. Okay. So
we're
we may
only
have
going to
time
present the
to do
buys
education
themselves
topic.
as well, right?
Yes, as always. That one doesn't change, right? If it's a buy and sell, you always present your SSG.
Right.
Yeah.
Yeah, but we're not going to present the holds, right?
No.
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 Okay.
Unless you feel like
No.
like
No, I agree. I think it's the right
holds
thing to do.
yeah.
To
Because didn't we
I
say
don't know.
hadn't you propose that we buy more PSA even though it was in a hold?
Yeah, this time, but it was more just from the diversification.
Yeah. Okay. All right.
Oh, okay. Okay.
I want to ask.
Oh, are you going to make that motion too, Matt? Buy
For
more
PSA?
PSA?
Well,
Yeah.
sure. Buy more PSA motion.
Nobody's going to second it.
I know. I didn't waste the time.
I want to ask a question. What I'm thinking would be very good if we could would be to look at cybersecurity stocks. You know, as the internet moves, Internet of Things and electric grid, and even the Air Force, they found that their network was been penetrated, and the cybersecurity is going to be very important, and maybe a stock in that area might be a real good investment for us.
And when the next stock study committee can take that under advisement and do a thorough search and research and presentation. But next month, we're not going to, as Joanne explained, we're not going to have that opportunity.
Oh, fine. Very good.
Actually, I will be the September stock study. Will be on the September stock study committee. I will look into that. Actually, me and Tom looked into security last year. It was not solid. Remember, Tom? Right? It did not look good at the end.
My recollection is the companies are all very expensive and not earning hardly any money yet. It's a lot of speculation.
Maybe.
So, yeah. Okay, so maybe we can toss an education topic for next month, or maybe just leave as is. It doesn't.
Do you have one in mind?
It's all good. Do we have anything we want to talk about? What things do you think we're urgent to want to learn?
Well,
Jay, for our new members.
I like to learn. I like to learn the preferred procedure.
Oh.
Yeah, that would be good.
Okay, so who doesn't have a presentation, a stock to present next month?
Matt. Sorry.
Yeah,
actually, Matt has it.
I don't.
You don't have any more? Oh, yeah. Okay.
I have 10
Yeah.
cent, which is I think the following.
Well, Hanny or Matt, do you want to do an education topic? Well,
Sure.
Hanny,
I'd have to think about it.
Hanny always does
Do you have a
education
time?
topic anyway.
I can do the preferred procedure.
Okay, I'll add that.
Oh, wow.
There you go.
Great.
Okay.
Yeah.
Then I won't have to call Bernard separately.
Very good, Haiti. This is good. You always do a good job, Haiti.
Okay, so is that it then? Then I'm gonna close the meeting and open it up for. I'll stop the recording. Let's see.
Look at that, Joanne. We're only like 5 minutes over. Okay, let me.
Okay, I stopped it. I stopped it. Okay, I'll open it up for the.
Okay.
Yeah, go ahead, Roy.
Yeah, it seems to me that last month we vote to make it a 2-hour meeting, but we got through it quickly, which is what our goal was too.
Yeah, yeah, which is good.
Yeah.
I
So
guess that's the way we just say it's going to be
It
2
was
hours
good.
and then we stop on time.
Right.
yeah, I'm okay with that.
Yeah.
Okay. All right. So we're going to.
I also have a quick comment.
Yeah.
About IPGP. The Tom made a comment on IPGP negative earnings or returns.
Yeah.
I put the value line, the latest value line on the under handouts. I don't see negative though, but anyway.
Okay.
Did you see that, Tom?
No,
Yeah.
I didn't.
Okay.
No, I didn't see where. It's
Handouts.
on Google Drive.
Go to webinar. No. Go to webinar control panel. Down the bottom, handouts. There's one's meeting agenda, one's IPGP value line, June 2018.
Oh, I see that.
Mm-hmm. Yeah.
Can I open it up to the audience now?
Go ahead.
Okay.
Yeah. Sorry.
Jennifer.
Yes.
I'm going
How
to.
do I open it?
Jennifer.
There we go. Okay. Never mind. Thanks.
Hi, Jennifer.
Yeah, hi.
Hi.
Yeah, it is showing negative.
Sorry, Tom. We're asking for attendee feedback, guest feedback right now. Jennifer,
Okay.
go ahead.
No, I don't have any. The only comment I do have is on this technology. Is there any way that the talking over each other can be avoided? Makes it very difficult to listen to.
Yeah, you know, we do have this little hand raising tool. Have you guys ever thought about using that? Yes, thank you, Jennifer, for that feedback.
I think that's a good idea.
Okay. All right. Let's try next month. Let's try use. Does everybody see that on there? If you click on your.
Yes.
Actually, no. It doesn't have. We don't have it for the staff. We only have it for the attendees.
Yeah.
We'll have to work on that.
Yeah, we just have to be more conscious of not interrupting someone during their presentation.
Okay.
But I don't know how when someone else is about to start speaking. That's the problem.
Yeah.
So
Yeah.
I just thought there might be something in the technology that could sort it out. But anyway.
Not right now.
We will look into that.
Yeah. Okay. Thank you, Jennifer. Welcome.
Yeah.
Do you belong to?
See you Saturday.
Oh.
No.
Okay.
No.
Okay.
I'll see you Saturday. See you on Saturday.
Okay.
Okay.
Okay. Some of us. Yeah. Mm-hmm.
If I can interrupt for just a moment, I just want to remind everybody that we've got the summer event out in Sun City in August. What is it? The 18th.
18th. August
18th. So you should have gotten emails on that. So I urge everybody in the Sacramento area to go to that. Doug Gerlach will be our speaker.
Okay.
I didn't get any email about that.
What? Canadians not invited.
Oh, it only goes out to those in Sacramento area chapter. But for nationwide and worldwide, I will be speaking in Ticker Talk, and I'll be showing how to screen using the online tool.
Oh, good.
So everybody show up on September 20th for Ticker Talk.
Okay.
Okay.
All right. Next we have Joyce. I'll unmute you, Joyce. Welcome, Joyce. Do you have any feedback? Joyce, are you there?
Oh, I think she's trying to talk, but I just thought you can type it up, Joyce. There's a
turn your
chat box in the bottom. Yeah.
Oh yeah, you can send us a comment through chat.
Yeah, Joyce is our returning guest actually. You can type it up and see, she's trying to talk. I cannot hear. You can. So there's a chat box in the bottom on the control panel. Go to webinar control panel. You can expand that chat and then type message.
Oh, she's trying to talk.
She's trying, but somehow it's not working. Yeah. Yeah. She probably have a question because I remember she contacted us through Facebook. You can email us or you can just type it up and we'll get it.
Okay. All right. So I think
Okay.
that was a good meeting. We gave everybody a chance to discussion, and I think everybody was happy with that.
Very good.
Okay.
Yeah.
Very good.
All right. And I thank you, Roy, Matt, and Megumi. That was excellent portfolio review. It's very helpful.
You're welcome. Thank you.
We probably should do that. I don't know.
I learned a lot.
Oh, hi, Joyce.
Oh, Joyce is talking? No?
No? Oh, that's not Joyce. Okay.
Oh, maybe somebody said learn a lot. Was that the Megumi? Who was it?
No, it's Joy's
That was
friend.
me. Yeah.
Oh, Megumi. Okay.
Oh.
Yeah, Roy, what's the recommendation? How often should you do a portfolio review?
Oh, typically you don't need to do it more than once a year, but
Okay.
I mean, it doesn't hurt, you know, like 6 months from now or something.
Yeah. Okay. All right. Well, our portfolio is in good shape.
Trying. Joyce is yeah.
Yeah.
He's trying.
Yeah, it's not.
Something's not working.
Okay.
Have not.
All right. Well, have a good
Okay.
month, everybody.
All right.
All right.
Thank you.
See ya.
Have a good
Good
night,
night.
everybody. Okay. Good night.
Bye.
Good night. Good night.
I'm going to see Jane tomorrow in Shanghai.
Yeah. Look
Oh.
forward to seeing you today.
Yes.
Okay. I'm dismissing.
And we will post the photo on Facebook.
Yeah.
Oh, good.
Broadcast
That's a good idea.
online club. Yeah, yes. And then hopefully when I go to Canada in August, I can meet Henny. Hopefully.
So what are
And
you
then when
doing?
I go to Southern California,
What are you doing in
meet Matt.
Canada?
Huh?
What are you doing in Canada?
Visiting Phil's family.
Oh.
Yeah.
So.
All right.
Okay.
Yeah.
All right.
Good.
Okay.
Okay. I'm gonna shut the meeting down.
Join. Okay. I have a question.
Okay. So I'm just dismissing everybody then, except for.
I thought. Okay. Yes. Yes.
Hold on a second.
Okay.
Wait a second. Because gotta get rid of Matt. Okay.
Okay. Matt probably was okay. So I thought Bernard is just going to be an observer. Apparently, he is following Comcast. Did he say, or did you tell him it?
No, he wanted to follow Comcast.
I thought. He wants to? Okay.
Yeah.
I thought you talked to him.
Yeah.
You asked him. Mm-hmm.
We'll see how he does.
Right now,
that Ozark was
okay.
hard
Yeah.
for him. He might be able to do. I mean, he just like.
Ozark is hard.
So, this might be a.
I think Ozark is hard, but the problem was not just because Ozark is really, he is a learning of how to do research. I just felt also he has not figured out how to fill out that form. So I felt that was a challenge for him, and I thought we let him just to be the observer, asking questions, participate through the meeting, but not to. That's always my understanding last time we talked.
Okay, well, let's see how he does.
does.
Let's give him a chance this quarter.
Okay.
If not, then maybe Matt can take the because he doesn't have a stock now, right?
Matt and does not have any. Who else? Henny does not have any, right? Because sold HCLP. Probably we won't have any new stocks coming until September.
Okay. Yeah.
Yeah.
Okay.
Right.
Yeah. Yeah.
We have another one, 5 and Skyworks. Yeah.
Yeah.
Wait, Skyworks is due next month. Really?
Yeah. So it's 10-cent, I think.
Oh, IPGP. So who's the following? Oh, Mina. What was another one that Roy is following too? The one that was airplane. What was the company called? The airplane company.
FleetCor? No, wait.
FleetCor. No. The one. What do you call that? Gosh.
LKQ?
The one that I presented. No, LKQ is a car. Let me.
Was it FleetCor? Wasn't FleetCor?
No, not FleetCor. I did not present FleetCor. It's it was they have a fleet. They have airplane. What do you call that? Let me look.
Oh, John's following FLT.
Yeah, John for FLT, but it's not FLT, something else. Let me just look at that one. She will be quicker. It was Roy follows it. Gosh, it was let me look the second page. Let me look the open a tab. HEI.
Oh, Heiko.
HEI.
Heiko. Yeah.
Heiko.
Yeah.
So actually, Heiko will be just about 2 years by October. So it's probably, it will just start rotating. Okay, Skyworks presented January. Yeah. So we can give Heiko away to either Henny or what's his name? Matt. Yeah.
Okay.
But yeah, did you see that? The current follower starting October 2016. So
2018?
Oh, it's October. Yeah, October. Yeah, 2018. So
okay.
It will be 2 years. Because we said that everybody follow for 2 years. And so yes, one of the folks that who did, yeah, because Roy is following too right now.
Okay.
That's it. Roy is following too, and I'm not going to follow too because sold all, and you following too as well.
No, I gave mine to
Megumi.
Megumi.
Yeah. Yes. Okay. Okay. So now we are good.
Yes.
Right. We have. Yeah, we're good. Okay. So for this sheet, you are just going to push O to the bottom, right?
Wait, tell me which ones did we sell today?
We sold O.
Okay, wait, let me put the sell date.
And we sold MIDD. So you
put today,
so the one that you did like
tomorrow's date?
Yeah. Yes. So you put them like you did, like added to row, right? Kind of under below BIBV.
Well, I'm looking at the 10K and 10Q schedules.
Yes. I'm looking at too.
Okay, where's middle?
So you know how in the bottom 4 rows you have all graded out?
Oh, I see.
The
so
Q1, Q2, Q3.
Just move them.
Right. So I don't know how you did it. Do you do something in some sort of order or no? Or you sold the BIVV first and the LKQ and the HCLP and the CVS? I don't know what's the order. Was there some sort of a sequential?
No.
Chronological sequential. How did you?
Should we do the sort by sell date?
So, yeah, maybe do that.
Or does it matter? Does anybody care? Does anybody care?
It's not really matter.
Yeah.
Yeah, but you have to make it nicer. Yeah, it really doesn't. You can add it in the bottom. Yeah. So you just move the other 2 to the bottom. It will be easier. You just use the what do you call that? The paint. So you will look the same. Okay.
So gosh.
Are we also going to change our what? What happened?
Nothing.
Oh.
So we bought middle B twice? I didn't know we bought middle B twice.
October. Oh, March we bought again. I actually have a middle B, but I cannot find out which portfolio I have. I just looked through the meeting. I looked a couple of mine. I must be bought for Phil. So I was wondering about the declining. Probably I will sell that one too.
Really?
Did you buy OLED?
Yeah, I have that one, I think. Have you sold it yet?
So, no, I have not. I'm debating because suddenly one day I was looking and I was like, what happened? Like half of my price got dropped. And I was talking to my mother-in-law. She said, yeah, if Apple comes out they're going to make their own screen, own technology with a screen. That's why the price got dropped. That's why the OLED got dropped. But I'm not following that company, so I want to read about it. And then before I make a decision, I was planning to sell it to take the profit, whatever I have, even though it's less profit, but still profit.
Oh yeah.
Before was like a what, 4 times? Yeah, right. 330 something, and then it was 200. Now it's like just about 85 or 90 or something like that.
So what happened? So because Apple's making their own, is that what's happening?
Yeah, Apple made an announcement that they are going to make their own screen, like OLED, like that using their develop their own technology for their screen.
Okay, so
Apple is using OLED as well.
Did we only sell Middleby then? And we didn't sell any Facebook and we didn't buy anything.
Yes.
Right?
Yes.
Okay.
Yes, I don't believe so. Did Matt made a motion for PSA?
Yeah,
he did, but nobody seconded it, right?
Yeah.
Yeah.
So you already started in 2019.
So how do you feel about
started
PSA?
2019. Did you already start in 2019?
I did it. I don't. Not me.
Okay, wait a
I don't know who
second.
did. Did I? No, Matt maybe did. I mean, no, sorry, Jane probably.
Okay. So next month we don't have Middleby. And you don't have O.
Yeah, you probably want to also document the reason.
Oh.
So for MIDD, the reason was because of the fundamental deteriorating, right?
Okay, wait a second.
That was what Roy said.
Okay, fundamentals deteriorating.
I think that was what he said.
Yeah.
He didn't say 3 quarters in a row. No, also the economy. No,
it's
mix that in. And what did he say?
What is it? The trade wars.
Right. What was it?
Pending trade wars.
He also said something else. He said something in his documentation.
Isn't Middleby steel related? Is it steel related?
They do kitchen.
Yeah.
Yes,
Pending
they do
trade wars,
kitchen. They making yes.
And then
actually argument for Facebook.
What was O?
Uh-huh.
We just didn't want to do O because weren't they in the buy zone?
Let me see. He documented it. Let's see. What did he say about? Let me look at the MIDD first. So we dropped to 14%. He said that won't make a sell recommendation because price is down. But I suggest we sell because fundamental has deteriorated. Future, at least temporary, looks rather bleak. Then it decreased in the recent quarter. Metal costs are increasing. Interest expense is likely to increase.
Okay, wait a second. Metal costs.
All 3 are bad news for him.
Metal costs are increasing. Yeah. What was the other thing?
Yeah. Interest expense is likely to increase also. And also the earnings decreased in the recent quarter.
Okay.
All 3 are bad news for MIDD.
Okay. Oops.
You may want to make that link. That's a good writing. Put that link into that document.
What was the link?
The write-up. Okay, let me. Are you on it? I already copied it.
Stock settings. Are you going to put it in there?
That specific. This one, the one I just sent it to you. This one is about Meadowbee.
Are you posting it in there? Are you sending it to
the one that I just text you?
Okay. You could put. So, are you looking at it?
I'm sending to you. Yeah. Did you see it?
Okay. So, what is this?
Let me see. Oh yes, I'm looking at it.
Stocks.
That is his write-up.
Portfolio review. Oh, will it do it? It won't do it, huh?
You will, because I did it for HCLP.
Do I have to do it for the whole?
That's okay. I'll try again. Oh,
You have to do it for the whole.
I see.
Ugh.
It's the whole thing. You just change the coding then.
Oh, it's
But
it's
how
in
come the
there.
highlight is
It's
not
in.
highlighted?
Are you trying it?
It's there. It's there. Okay. No, I'm not trying. I'm just looking at your screen, but I can
Okay.
see that it highlighted.
Let me try taking it out and then doing the whole thing.
Okay.
Oh shoot! It's just there. Oh well.
Yeah.
It's weird that.
Please see portfolio review right up. Maybe. See
Okay.
the portfolio. Yeah. Okay.
I mean, if you hover over it.
Okay.
Okay.
Mm,
And now what about?
yeah.
Oh. What was?
O was. Let me see. Why when you turn on for your Facebook? Oh, what did they say about O? Delete one of our rates. We felt
Like something about the interest rates, right? Or the economy. The economy. In anticipating a weaker economy, that retail is not going to be doing well, right?
I'm reading what he said. They are not confident with REIT will do well should the economy fall into a recess due to increased interest expense, but we think it's important for us to hold at least one. Say for education purposes, we prefer to
Follow.
held one REIT, for one REIT rather than have both.
Okay, so
in addition, REIT's kind of hard to understand.
but the reason
hard
why
to
REITs are not
difficult to understand because
no,
they just
that's
say
not
Matt
they're
and
not
Roy
diff-
struggle to
they're not
understand
difficult. But right now in today's economy, REITs are not. Into today's economy, REITs are not doing well.
Should the economy soar because of increased interest rate or the looming trade war become a reality?
Due to
holding buildings for retail could be in jeopardy. Oh yeah, they did say that. Yes.
Increasing
the economy because increases in interest rates or the looming trade wars become a reality. REITs holding buildings for retailers could be in jeopardy.
REITs holding what? What was it? Retail?
REITs holding buildings.
So
yeah. REITs holding buildings for retailers could be in jeopardy.
I'm just going to retail.
So are you opening that document? The second economies are not doing well due to increased interest rate, looming trade wars. Retail holding buildings like right? They are having buildings.
Holding retail.
Retailers could be in jeopardy.
Yeah, retailers could be in jeopardy. That's better.
Okay, let me give you this link and you open up that you can still. It's kind of this one is about the REITs.
Okay. Which one was this? So I think I just have to do the whole thing. Let's see. There.
Yeah.
Well, I guess I have to.
Right. And maybe you make a conclusion. Say we decided. Oh yeah, just change the text. That's it. Hold on. Go. Oh.
Well, I'm just gonna
You added a link, right? Yeah,
Oh,
and when you edit link,
I want to unlink it and then add it back in. What's convert to link?
Right, and then you look. Okay, look, edit the link, edit link, edit.
Yeah, but it's already.
Link.
So
did you see the text?
I want to take it out.
Did you see the text? Oh, okay. So what I'm saying, the text, you can change it where you want to link. Not here. Right click. Right click.
I got it.
Edit link. Okay. There you go. See text? Yeah. Just say, please see portfolio review, delete all that.
Yeah, but see, I think with these spreadsheets.
It won't work? Oh, darn. Control Z.
Well, let's see. No. Well, I wonder if I can. Oops.
Maybe
you have to link the whole. You have to link all. You have to link all the text.
Really? What about add a space, create a new space, enter a new space. So please see the portfolio in the second line. See if that helps. Oh, what happened here? Oh, the hyperlink is broken.
Oh.
You had a parenthesis. Yeah, delete that.
Now, what do you want? What you want to do? Wait.
Okay.
You know
First of all, just copy paste.
Oops. Oh shoot. You know what? I'm using a oops.
Command Z. Yeah. Command Z again.
Okay.
Yeah. Okay. So what you do is please see portfolio review right up. What you do is a command and space. So make that the second line. See if that helps. Put the cursor before, please. Yeah, please. Yeah.
I don't think it's gonna.
No, not here. Just.
See when you click on it.
Do you want me to try?
Yeah, you try it. You try it.
It will take you.
When you click on it, it takes you to the hyperlink.
Oh. Okay.
I think you need to go.
You need to go? Oh, hold on. Let me see. Please see portfolio review right up. I'm going to delete that first. Right, enter, and then I'm going to put the command space. And then
Did you get it?
I'm looking. Why do I got extra?
I put that on the bottom.
Oh, okay. Hold on. So we can report this to Google. They
need to fix that, huh? No, but you know what? Excel's like that too.
Hold on. Let me remove the link first. Yeah, let me remove the link, unlink first. Delete the link first. Another link. Okay. Okay. Yeah, let me copy. Oops. Okay. Okay. Now let me add a link.
I think you have to select all the text.
Let me add a link now. Share the link. And then do that. And then okay. Let's see. You're right. Cannot do the multiple thing. No, it doesn't work.
Yeah.
Yeah. You have to do the whole thing.
Whole thing, yeah.
Cannot edit multi-paragraph selection. Yeah. Okay. Okay.
Yeah,
so
Excel
they
does
got a
the
bug.
same thing. Well, no, Excel won't let
Yeah.
you link to just a part of the cell. It has to link to the whole cell.
Yeah. Right. I know I cannot link at all.
Come.
Okay. Okay, now it does. Okay, got it. Yeah, you're right. Does it have to be whole cell? So, but how do I get the before? How do you make an under? How do you make a blue rather than whoever? How did you do that?
I don't know. I don't know. Is that
You just by accident? How did you?
Well, I selected the whole cell when I linked it. So maybe you're.
That's what I did too. I select the whole cell, just whole cell. And then I click the insert link. That's what I did. It's weird. Let me see what's the difference. Equal sign, hyperlink, parenthesis, equal sign. Okay. Have you started a new job yet?
Yep. 3rd week.
Oh. Wow. How was it?
Great. I love it. I love my
Oh, that's awesome.
Yeah. You need to find a job that you like.
That's good.
Maybe you don't. Maybe you don't work. Maybe you don't work anymore.
I'm working.
I
have been working for free.
No, you don't work for free. Do not work for free. Start your own business. I'll do your website.
Yeah, you know how I did it. You know how I did a school's website? I designed the whole school website, the school website. I did all that.
Oh,
I published a magazine. I did all that.
You can do marketing. Marketing for small businesses. That's what I do.
Yeah.
And I charge $80 an hour.
Really?
Yeah.
Then you and I, we need to talk.
Yeah, we need to talk.
Onto my own
never
business.
Give your stuff away for free. Are you kidding me?
Yeah.
No way.
Right now, I'm helping school to do marketing because they are hurting so bad because homeschooling being competitive, also Waldorf school getting funding from government. So Celine school, so enrollment has declined, but I really love that school. I don't think there's another school like this. I can't say in the nationwide, I don't see. So I actually was thinking now I need to write a letter to Oprah Winfrey or someone, to get money because, the school's in trouble. Yeah. I need to help them do the marketing.
Okay.
Yeah. Okay.
All right.
I cannot fix that. I'll let you do it, or maybe I will do it when I get back to the States.
Okay.
Okay.
What time is it there?
Alrighty. All right. 11 o'clock morning, Tuesday morning, 11 o'clock.
Oh, okay. All right.
Yeah.
Well, have
Tuesday
a good day.
Morning. Okay.
Okay. Bye.
Yeah. Thank you, you too. Okay. Bye.